Whoa, buddy, put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Oh, yeah. Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Welcome to Tuesday. You know what Tuesday means. We're about to jump into it, deep into the deep end of the pool. Get into numbers and ideas and philosophies, and it's going to be awesome. That's right. Awesome. Awesomely painful. It's going to be great stuff, and we're going to enjoy it. Brad Keithley with Alaskans for Sustainable Budgets is about to join us here to talk about the weekly top three. And then in hour two, I've got some thoughts and recap. I'll recap some of what Brad talks about, give you some of my thoughts that I didn't squeeze into hour one. Plus, today we got a couple spicy stories. One specifically that I'm cackling gleefully over, but at the same time, I'm sad. I'll explain that to you in hour two. And then we're going to finish up with Chris Story, the man from Homer, who's going to give us our weekly uplift, life coaching lesson, therapy session, whatever you want to call it. That's coming up at the end of the show today. Good morning, my friends. We are broadcasting live across the internet at michaeldukeshow.com, where you'll find links to the audio-only live stream, as well as links to our social media sites, including Facebook, YouTube, and Rumble, where you can watch the show and hang out with all the cool cats in the chat room. And, of course, live around the state of Alaska on this, your favorite radio station and or FM translator. Hi, how are you? Are you ready? Are you ready for this? It's going to be a good one. We got a lot to cover today. So without any kind of further pause or pontificating, let's jump into it and get together with the man, the myth, the legend from Alaskans for Sustainable Budgets, Bradford Keithley. Hello, my friend. How are you doing today?
Michael, I'm doing great today. It sounds like you've recovered from whatever you had last week.
Oh, man, last week I was a little bit under the weather, and I feel a lot better this week. October, I don't know how we got here. October is tomorrow, but I just, I'm trying to enjoy what does Chris say? Something about, just enjoying the ride. The destination is somewhere, but I'm trying to enjoy the ride. It's going so fast. Tell me, as a retired guy, does it slow down once you retire, or is it just keep staying as fast as it can be? I just want to know.
Well, it depends on what you do. If you try to do a podcast a week and a column a week, it sort of keeps on going.
Yeah, good. I see. That's the thing. When I retire, I promise not to do a podcast a week. I'll do 5. All right. So let's get to it, Brad. We've got a lot of stuff to cover today, and some interesting takes, some hot takes on some stuff. So let's get started. This week's topics is number 1, something called Alaska's K-shaped economy. What are we talking about today? The K-shaped economy. I'm curious.
Well, there was an article in the ADN repeat of an article from the Washington Post that I found interesting and dived into a little bit. The headline of the article was "The wealthiest are boosting the economy as consumer spending rises again." And this is really a story about how averages can be distorted. What's going on, what this article develops using a lot of economic data and economic data I've heard friends elsewhere in the country discuss. What's really going on is the top 10%, the top 20% are increasing consumer spending. They're finding they're finding their wealth enables them to increase consumer spending, and they're spending it on various goods and various segments of the economy that are tied to that segment of the income bracket are doing well. But that's masking what's going on with the other 80%. And with the other 80%, you find when you look at income data and you look at spending data and other similar data, you find that they're sort of barely breaking even. They're sort of hanging on. They're not boosting consumer spending. Their income data isn't, or their incomes aren't boosting overall income. They're just sort of staying even. And what economists describe what's going on is a K-shaped economy, with the top income brackets going up, both in terms of income and in terms of consumer spending. And on an inflation-adjusted basis, the bottom income brackets sort of in a slow but steady decline. The result is that, and you can see this in the income data that we look at from the IRS about Alaska, the result is the averages are going up. Consumer spending overall is going up, but it's being driven, and this is national, it's being driven by the top income brackets that are driving it up, the top leg of the K, or the top arm of the K. It's being moderated significantly. I mean, if all of the income brackets were doing the same, we'd have a super spike going on. But it's being moderated significantly by the sort of steady decline, slow decline that's going on with the bottom arm of the K, the lower income brackets. So my question was, all right, this is a really good national article. Let me dig into Alaska data for a little bit and see what I can find with respect to Alaska data. And the Alaska data, I know it will come as no great shock to anybody, but Alaska isn't the first thing that economists think of when they develop this sort of data. So the data,
shocking.
The data isn't as fulsome, certainly, as what you see at the national level, but there's some. And you can see the same thing again by looking at the income data, both from the Census Bureau and from the IRS. Income tax statistics. You can see the same sort of rise going on in incomes in the upper arm of the K bracket, and you can see the same sort of steady sort of decline-ish going on in the lower arm, the middle and lower income Alaska families bracket. So I dove into that a little bit more and said, okay, so what's really the cause of what's going on in the middle and lower income bracket? And there's a lot of things that are going on in there. But one of the things is the slow and steady decline of the PFD. Alaska used to not look as much K-ish as it looks now. It used to, compared to the national average, it used to be much flatter in terms of both arms. Both arms used to be much closer together than they are now. And a driver behind that was the PFD. When you look at income data on a household basis or on a family basis, as opposed to on an individual basis, the PFD was a not insignificant source of income to households in the middle and lower income brackets. As the PFD we all know the PFD has declined. I mean, not only in terms of not only against inflation, but just absolutely it's a decline. And as the PFD income has declined, you find Alaska forming a more and more sharp K, right? With the upper income brackets.
You're talking about the difference between $4,000 for a family of four and $12,000 to $14,000 for a family of four. Yeah, that's a significant bump.
Yeah, when you're talking about middle and lower income Alaska families whose income is not huge to begin with, so when you're taking that out as a percent of income. And so I extended this thinking a little bit further and sort of pondered whether that's the source of outmigration. We have, or that's one of the big contributors to outmigration. We have talked about this before on the show. I've written columns about it before on the show, but I sort of went back to that data and looked at it again And the data shows, when you look at the IRS statistics, when you look at the Census Bureau statistics, the data shows that we're losing families, working age families below age 60 and below. We're losing those families in the middle and lower income brackets. We're actually increasing families in the upper income brackets in Alaska. So there's in-migration in the sense that the number of households is climbing. There's in-migration going on in the upper income brackets. They don't need any additional help. They're doing fine. They're attracting more people here. But in the middle and lower income brackets, that's where we're losing working age families. And so as sort of the net of this is, as you look at what's going on in Alaska, when you think about it in the context of a K-shaped economy, and as you look at what's going on in Alaska, as our K arms are getting farther and farther apart, as they're spreading, in part driven by the decline in the PFD cuts, as they're spreading like that, you're seeing more and more out migration among the lower part of the arm. They're finding better opportunities or other opportunities elsewhere in the U.S. And that's I mean, we've made this point before, but I think seeing it starting from the national level and seeing what's going on at the national level and going through the economics, and for those interested, I would recommend this article. It's in the September 26th, published September 26th, so a few days ago. The wealthiest are boosted. The headline is, "The wealthiest are boosting the economy as consumer spending rises again." As you read about that in the national context, you can see Alaska being affected by the same thing in terms of the K legs spreading farther and farther apart. And so right. When the legislature thinks about, the legislature, I don't know what they think about half the time, but when they think about the PFD, when they think about PFD cuts, they're thinking about, we're going to redirect this money to do good, right? We're going to redirect it to the government. Well, they're not thinking about, I don't think, there's no indication they're thinking about who they're directing it away from and what that causes in that general population. And if they're truly concerned about the Alaska economy, that's something that we ought to hear more about when it comes to those decisions.
We've had that conversation in depth ad nauseum on this show that they're not thinking about the private economy. The private economy is not, if it was an afterthought, that would be an improvement. It's not, they're not even thinking about the private economy. As long as the government spend and the government economy is doing well, they are not thinking about what is the effect of anything that they're doing on the private economy. There is no discussion because they get nothing from the private economy in their minds. Their full and whole source of income is the permanent fund and the oil revenues and the royalties, and that's all they think about. They do not think about what's going on in the private economy because it doesn't feed the coffers, so why should we care?
But they're not thinking, Michael. They're not even thinking about set aside private and government. Good point, excellent point, important point. But they're not even thinking about middle and lower income Alaska families. They're thinking about select segments of middle and lower income Alaska families that they can help by redirecting these funds out of the bulk of middle and lower income Alaska families into this subset that they're directing these government programs to. And certainly they're thinking about the government employees and the constituencies they create and the advocates they create by directing it into these subsets. But it's coming at the expense of a spreading K economy in Alaska and coming at the expense of worsening the economic position of middle and lower income Alaska families, who then in turn, it's not like they don't have choices, then in turn are the biggest segment, are leading the outmigration. So it's right. We're not having somebody who's sitting in the legislature who's thinking through the impact of these things on Alaska families or on the Alaska economy.
Again, not surprising if you've watched their behavior. And And again, it's about control. And I think you hit the nail on the head when you talked about constituencies, because are they bolstering their constituencies? And is the constituencies really the lower income Alaskans, or is it the people who are writing the checks for their next campaign? All right, we got to go. Hour 2 or hour 1 continues. The weekly top 3 number 2 is up ahead. The Michael Duke Show. Common sense, liberty-based, free thinking radio.
Listened to by more staffers in Juneau than any other show, because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Brad Keithley, Alaskans for Sustainable Budgets. Yeah, I mean, Brad, again, not shocking that that they are not really thinking about that. It's become such a bubble. I mean, the whole thing has become just such a bubble that at this point, anything outside of that little bubble, what does it matter? As long as we create the programs that we say we need to create, we could feel good about ourselves, pat ourselves on the back at night that we gave the poor, pitiful people the program that helped them. As long as that money's there and we can get reelected to come back, then what does it matter?
Yeah, the thing that I think that frustrates me the most about those who say they're helping the poor, they don't focus on, or if they do, they just ignore it. They don't focus on who they're taking the money from. We're funding all these programs, all this spending that's going on for the various programs. We're funding it by taking it out by using PFD cuts. We're funding it by taking it out of the pockets of middle and lower income Alaska families, generally. So we're robbing Peter. I mean, we say we're concerned about middle and lower income Alaska families, right? Legislators would say that that's the heart of the economy. Middle income families, 80% of Alaska families fall into those brackets. That's the heart of the economy. That's who we're concerned about. That's who we're thinking about. They say that, and then they take the money out of their pockets, largely not out of the top 20%, certainly not out of the oil companies, not out of non-residents, unlike any other state in the nation. They take the money out of the pockets of those they say they're looking at that are the heart of the Alaska economy, and they're directing it to these subsegments. And so the subsegments, and you got to create a bureaucracy to do that redirection and to provide the services. So that subsegment looks like it's okay. And when you focus on that subsegment, you're going, hey, they're doing great. But then you don't go back and look, well, what did I do to the broader segment, the middle and lower income Alaska families that I took the money out of? Oh, they're going down and down and down. They're forming the lower leg of the K, and the K is spreading wider and wider. I mean, that's the tragedy of this. We're focusing these dollars. We're taking the dollars broadly out of middle and lower income Alaska families. We're focusing it on subsets, and then we're judging the success of it by looking at the subsets. And we don't look back at the people whose pocket we took it out of, and we don't look back at how they're doing. And that's just it's frustrating.
Well, and to use your analogy, I mean, we're robbing Peter and Paul to pay Paul, right? Because middle income Alaska families don't really get any benefit from all the programs that are created. Lower income Alaskans are supposed to be getting the benefits, but you're robbing all the money from them to pay for those benefits. And you're robbing the middle class who don't get anything. And so they're the ones that are, everybody's feeling the pinch on the lower end to supposedly take care of the lowest income Alaskans. But if you gave them $12,000 for a family of 4 or $15,000 for a family of 4 versus $4,000 for a family of 4, they probably could probably grab themselves up by their own bootstraps and do it themselves. Instead, you've created bureaucracies and problems and more overhead, and you've cut the middle income Alaskans out completely because they don't qualify to benefit from all these programs.
Yeah. It's no other state does it this way. Every other state gets a portion of its revenue from non-residents. Alaska doesn't. No sales tax, no statewide sales tax, no statewide income tax. Alaska doesn't get a portion of its revenue from non-residents. But we have one of the highest, if not the highest, non-resident segment of our workforce that's non-resident of any state in the nation. We're just letting them get off scot-free. No other state does that. No other state has as regressive a tax, as regressive a revenue system, if Randy's going to flake off on tax, as regressive a revenue system,
Right.
As Alaska does.
Yeah.
No other state has that. So we're making it worse.
Yeah. Frank has a good point. We don't have time to explore it, but he says legislatures also say private small business is the backbone of Alaska. Not true. The government spending is the only thing keeping Alaska failing. I mean, I can't say that he's wrong at that point. All right, let's jump into it. Here we go. The Michael Duke Show.
The Michael Duke Show, proudly splitting the left versus right dichotomy. Yeah, I had to look that word up too. I don't think it means what he thinks it means. Here he is, though. That guy, Michael Dukes, the one with the show.
Okay, we're continuing the weekly top 3, our deep dive into Alaska's economy, politics, and more. This number 2 today, we're going to talk about the weak defenses of the Permanent Fund Corporation. Oh, they have a weak defense. Brad, what do you mean here? Let's get with it.
So Devin Mitchell, who's the executive director of the Permanent Fund Corporation, has written this column that is making its way around the state. I've seen it thus far in the Alaska Landmine and Must Read, and in the Frontiersman, and I'm sure it will make its way to the rest of the state's newspapers, those that haven't closed up. Will make it to the rest of the state's newspapers in due course. And basically, it's a defense of how the Permanent Fund is doing it. He offers it as positives. This is how your Permanent Fund Corporation is performing. But in the wake of the stuff that we and others have been saying, the analysis we and others have been doing of the Permanent Fund Corporation, you can sort of view it as his defense, particularly when he published it in the Landmine, where all of my columns on the Permanent Fund Corporation have been. I
noticed that. I was like, oh, I see. Brad must have poked the bear somewhere in there for them to file it here.
Well, it's their annual. They've come to their annual results, their annual report, and this is probably the letter that goes at the front of the annual report. But I just thought it was curious that the first place it showed up was in the Landmine. But I want to look at this for a moment. Do you have the chart that I sent? Can you? Yeah. Oh my gosh, you're just on the ball today.
I'm with it.
Okay, so this chart, we've talked about it before, but it's time to talk about it again in light of Devin Mitchell's column. Devin Mitchell defends two things, or promotes two things that the Permanent Fund Corporation is doing. They are producing long-term performance, long-term returns for Alaskans. They're growing the permanent fund, and the other is they're generating revenue for the state. In terms of additional POMV draws. This chart looks at since FY20, compares the performance of the permanent fund, both in terms of balance, in other words, in terms of growth, which is the red line at the top, and in terms of POMV draws or POMV returns. Revenues for the state, to put it in Devin's terms, which are in the red bars. If you go back before FY20, if you go all the way back to FY12, which is when Vanguard started their S&P 500 ETF electronic traded fund, if you go all the way back, you would see that in 13 of the 14 years, the Vanguard S&P 500 ETF, the heart of Warren Buffett's 90-10 investment approach, 13 out of 14 years, the Vanguard would have exceeded the returns generated by the Vanguard ETF would have exceeded those of the permanent fund. This chart just goes back to FY20 and looks at what the effect would have been. Essentially says, look, okay, so it would take a few years to recognize this is what's going on. Let's say they finally realized, the Permanent Fund Corporation finally realized what was going on and started in FY20 to shift the investments to the Warren Buffett approach. If starting in FY20, the blue line, which is the returns generated or the balances of the permanent fund, what the balances of the permanent fund would have been had it been invested in the Warren Buffett approach, the S&P 500, 90%, and a debt ETF, long-term debt ETF, 10%. Had it been invested in that, the blue line shows what the balances of the permanent fund would have been. The blue bars at the bottom show what the POMV draw would have been had they adopted since FY20, if they had adopted the Warren Buffett investment approach. What you can see is that the red line essentially flatlines between FY23, the last downturn in the market, and FY26. The last point on this is the end of month FY26, the most recent for which the Permanent Fund Corporation has published data. And you can see that the red line is just essentially flat across that time. No additional growth coming out of the Permanent Fund Corporation's investment approach. But you see the blue line jumps from about $80 billion in FY23 to now $124 billion, $125 billion if it had been invested in the S&P 500. So when Devin says, "Oh, we've had great long-term performance, we've had great growth in the permanent fund," no, you haven't. What the growth you've had is between 76 and 81, $5 billion of growth over essentially 4 years. In the meantime, if you'd invested in the S&P 500, if you'd invested in the Warren Buffett approach, it would have grown from 80 billion up to 124 billion. Devin says, we're generating revenue for the state. Okay, yes, there is a red bar there that shows you are generating a POMV draw for the state. But look at what it would have been had you invested in the Warren Buffett approach, had you taken the 90-10 approach based upon the S&P 500. Instead of the 3.8 billion that everybody celebrates is coming out of the POMV in FY26, it would have been 4.49 billion. It would have been $700 million more, nearly 20% more, had we invested in the Warren Buffett approach just since FY20. If you go all the way back to FY12, which is where the S&P 500 began, the numbers are huge. They're astronomical. The differences are astronomical. So what Devin's trying to do is say, hey, look, we got a red line and we got red bars. Isn't that great?
Right.
We've got a balance and we've got POMV draws. But that's not the story. The story is, what could it have been had you taken a different investment approach, an approach that in 13 of the last 14 years produced higher returns than the investment approach you were taking. That's what it should be measured by.
And would have cost nearly $1 billion less, right? Because there's 900 million in management fees for doing this, the investment approach that they're using versus just plugging it into the Vanguard formula and leaving it and setting it and forgetting it. It would have been $1 billion per year less in investment costs.
Yep, exactly right. Exactly right. And that $1 billion is being reflected in the red line. The red line is $1 billion per year less over the last several years, $1 billion per year less because of the investment approach they were taking, the costly investment approach they were taking. You're exactly right. The blue line is very low cost. I mean, that's why Warren Buffett recommends it, because it's low cost. You're not losing a bunch of your revenue, a bunch of your income off to paying for so-called experts.
This is just another one of those. I mean, this is gaslighting. This is exactly what this is. This is gaslighting. Okay. We'll take our bad news here and we're going to spin it in the best light possible and tell you that you're getting exactly what you deserve. This is, look at what great stuff we're doing. Again, not looking at the alternative. And I mean, this is not about somebody just said, when is all this theory going to hit the streets? When is Brad going to run for governor? This is not theory. You're looking at the raw numbers to say, here's what the comparisons are. And yes, the S&P, the Vanguard fund is more volatile, but even in its own volatility, it still provides more funding for the state in both the short and the long run. I mean, that's crazy.
Yeah, what you get, I mean, the permanent fund touts the fact that their approach isn't volatile. Well, you look at FY23. Their approach went down also. It went from FY22 balance of 81.9 down to 76.34. They have volatility also. It's not as volatile as the S&P 500, but the volatility of the S&P 500 is biased upward. I mean, yes, there are some down years, but there are a lot more up years, and the up years are a lot bigger in terms of up than the approach being taken by the Permanent Fund Corporation. I think the real telling, when people say volatility, the statistic to me that kills that off is that 13 out of the last 14 years, the Buffett approach, the 90-10 approach, has outperformed the Permanent Fund Corporation. The Permanent Fund Corporation says, yes, but there was 1 year, and it happens to be FY23. So you can see on this chart that 1 year that the permanent fund outperformed the S&P 500. The permanent fund will say, yes, there was 1 year that we outperformed the S&P 500. That's 1 year out of 14.
Well,
and in the meantime, in those other 13 years, the S&P has built up a huge balance compared to where the Permanent Fund Corporation.
But even in the year that they beat the S&P, as far as the drop was not as dramatic, if we had been in the S&P 500, we still would have received almost $200 million more in revenue from the POMB draw. I mean, this is, it's right here in front of you in black and white. You can look at the numbers for this 5-year period or for the 15 years all told. I mean, again, it would have been every year again, and without that $1 billion a year, $800 million a year in fees to do it.
Yeah, so the Permanent Fund Corporation, gaslighting is probably the perfect term to this. I really hadn't thought of it before, but the Permanent Fund Corporation say, here, look at what we've done for you. We haven't lost any money because we're not volatile, but we haven't made any money. But the rest of the story is we haven't made any money. We haven't built up the fund in the same way that investing in the Warren Buffett approach. And this isn't the Brad Keithley approach. This isn't some fly-by-night approach. This is Warren Buffett saying this is the right investment approach, the 90-10 investment approach. People say you don't have diversity in the 90-10. Well, you've got the entire S&P 500. Corporations doing well, corporations doing bad. You've got that entire mix. You're hedging against volatility by using that entire mix. And in 13 out of 14 years, it's produced a higher return, a better return, better values for those who invest that way, as opposed to what the Permanent Fund Corporation is doing. And
I don't mean to get stuck on this fees thing, but isn't Wyoming, this is what Wyoming is doing, right? They have a fund. It's not like the permanent fund, but they have a big fund that they use, and they tag to the S&P 500 Vanguard fund, and they pay one guy $250,000 a year to manage everything. And they've seen greater rates of return and more stable, again, following the blue line, than we have, spending $800+ million a year.
Yeah. And that $800 million is really so the permanent fund board members who don't know what they're doing, by the way. The permanent fund board, they've established that. Heck, the chairman, Jason Bruni, says, I don't know what I'm doing. I wish we had other people back who did know what they were doing. I mean, that $800 million is to give the board members cover. Oh, well, we didn't make these decisions. We relied on this and we paid a lot for this investment advice. And so it must be right, and it's not our fault. It's the if there is a fault, it's the fault of the investors, or a fault of all the advisors that we hired. It's a CYA. But what you get, I mean, the other investment approach is to follow Warren Buffett, and who's been better at this over time than Warren Buffett. So it is frustrating. It is gaslighting. When you read Devin's article, he talks about none of this. It's all the red line. Isn't the red line great? The red line didn't go down. Isn't that great? The red line produced the red bars, which is revenue. Isn't that great? Yeah, but it could have been much, 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 much greater.
Right. Yeah, because all the blue bars are all higher. That's the thing. I mean, he didn't talk about the blue bars. Let's not talk about that. Let's just look at how pretty the red bars are. But the blue bars are higher every freaking time. Even in the downturns, the blue bars are higher. It's astonishing. All right, Brad, we're up on the break here, so we're gonna continue here in just a second. Brad Keithley is our guest. The Michael Duke Show. Common sense, liberty-based, free thinking radio. We'll return with more in just a moment. Don't go anywhere. We'll be back with number 3 of the weekly top 3 right after this.
Listened to by more staffers in Juneau than any other show because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Okay, we're continuing here. The weekly top 3 onto this. Chris makes a valid point. And yes, it would require a whole kind of redirection. He said they'd have to sell a lot of real estate in order to invest the money that you're talking about. Well, again, that's what I think Brad is pointing out, is that this is a whole different approach to what they've been trying to do that's not generating the revenue. Yes, you'd have to take a whole different type of approach to make that work. Brad, am I wrong? Am I misreading what you're saying here?
That's exactly right. That's exactly right. And what you would be investing in is the S&P 500, and you'd be investing in some companies that are heavily in real estate. You'd be indirectly investing in real estate through companies that are heavily invested in real estate. You wouldn't be out of it. You'd just be doing it indirectly, and you'd be relying on the management of those companies to perform. And over time, you've seen that performance outstrips the performance of the Permanent Fund Corporation, who's investing directly in real estate. So yes, you would take your money out of the direct investment in real estate, but you would still be invested in a proportionate amount in real estate through the investment in the S&P 500. Some people sometimes make that point, the point that Chris says, well, the red line isn't really what the red line is. The red line, you're not capturing all the appreciation that's gone on with real estate or with their other private investments. And the red line's really something else. Well, the Permanent Fund Corporation revalues on an ongoing basis, revalues its investments to reflect fair market value. And basically what you're arguing is, well, they're not really capturing fair market value. The red line isn't really what the actual investment base isn't what the red line is. The fair market value would be higher. Well, that means that the Permanent Fund Corporation isn't doing their job in valuing the fair market value of their assets. But setting aside that, you would still be invested. You'd be invested in pharmaceuticals. You'd be invested in real estate. You'd be invested in oil and gas. You'd be invested in all of the things that people want you to invest in, that people think you should be invested in, but you'd be invested in it through the S&P 500 as opposed to directly investing in it. And we're seeing the difference in results, the difference between the red line and the blue line of investing through the S&P 500 as opposed to investing directly.
Kyle just said, the red line is smoke and mirrors. Well, if that's the case, then the Permanent Fund Corporation has failed. If it's smoke and mirrors, that they're the ones that are providing this valuation, Kyle. So are they doing a good job? He says this is where the argument falls apart. The red line is smoke and mirror. This is the numbers that they're delivering. How does that? I mean, I just I just don't understand how this argument goes. I don't understand.
To the extent that there's smoke and mirrors, there's smoke and mirrors on the high side. No investment firm is going to say that, oh, our investments are worse than what they're performing. To the extent there's a bias in here, the bias is on the high side. So if there's smoke and mirrors, there's smoke and mirrors on the high side. The blue line is real. The blue line is real S&P returns. The blue line is real investment returns by investing in the Vanguard S&P 500 ETF. Those are real numbers. The red line, to the extent there's smoke and mirrors, to the extent they're made up numbers, that's the high side. If he's saying there's smoke and mirrors, the real numbers are lower than that because the incentives and the investment bias is always to upscale your investment value as opposed to low scale it.
And Kyle says, I know you don't understand because we're too stupid to understand. Kyle apparently has all the solutions out there. Kyle's got it all. He can't explain how it's wrong. He just knows in its heart that we're wrong because we're fighting the machine. That's what it's all about there. Going back to Chris's comment where we'd have to sell a lot of real estate. Brad created the red line. No, those red lines came from the PFD and from Devin Mitchell. That came from the thing, right? I mean, this is not Brad's numbers. These are numbers that Brad took from Devin Mitchell's commentary and from the reporting of the Permanent Fund Corporation. So
absolutely. Those are from the annual reports. Those are from their monthly, to the extent they're monthly. Those are from their monthly reports. The blue line is from simply looking at the value of Vanguard's S&P 500 ETF, looking at the value of that over periods.
Yeah.
So I've created none of these numbers. I have calculated the numbers from existing from published numbers, audited numbers. I'm not creating these numbers.
No, that's okay. Kyle knows better. I just, every time I go back to Chris's comments and I see, you'd have to sell a lot of real estate in order. But yeah, that's being like people saying, can't believe we'd have to sell our horses and buggies to buy these newfangled cars and do all that. If it's not working, then and there's a better way to do it. Yeah, you're going to have to change the way you do things. That's how it works. It is what it is. You're telling half the story and I'm sick of it, says Kyle. Okay. Well, Kyle, get your radio show and you tell the story. Here we go.
His boss has got a radio show.
Public enema number one. Oh, wait, sorry. Public enemy number one, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke show.
Oh, I'm a pain, all right. I'm a pain for certain people, for sure. They don't like that at all. Brad Keithley, Alaskans for Sustainable Budgets. The weekly top three continues. We're getting back into it here. Number 3 of the weekly top 3. This is Brad's new point. All op-eds should be required to come with a fiscal note. We've got an op-ed and we think it's all well and great, but boy, it should really be required to have a fiscal note with it. Brad, what are you talking about?
Well, I read a bunch of op-eds. I read a bunch of op-eds every week, and I read a bunch of op-eds this past week, and the cumulative effect by the time I got to the last one, they were all about we should spend on this, we should spend on that, we should be doing this, we should be doing that. The cumulative effect of all those at the end was, yeah, but how much would they cost? And what's the expected return? We don't have, the state is out of money, folks. I mean, the state doesn't have, in part because we're not generating the revenue that we should be out of our existing assets, but the state doesn't have any money laying around spare that it should be investing in these things. Yet we get these articles that say, oh, you need to invest more in K through 12. You need to invest more in this. You need to invest more than that. And at the end of it, I said, well, what we ought to have, what ought to be required is that the end paragraph of every one of these articles, after they've made the case for why do we ought to spend on this, the end paragraph ought to be a fiscal note that says, this is how much it costs. This is the long-term cost. This is the return. that we're anticipating we're going to generate out of this. This is why it makes financial sense. And with that baseline, with that sort of fiscal note for every one of the op-eds, we could start making judgments about whether A, we have enough money to spend on these things, and B, what the relative returns of spending on one thing is to the other. The thing that started me down this road was an article an op-ed by Kelly Lessons, Anchorage School Board Kelly Lessons, that says, opinion, riding the cyclone of Alaska school funding. And basically it was, we ought to be spending more. We're going up, we're going down. We aren't really going down, but we're going up we're not going up enough in Alaska school spending, and we ought to be spending more. Fine. How much is it going to, what are you arguing for in terms of cost? What's the return that you anticipate out of that? And let's make a judgment about whether it's worthwhile to do that. All of these articles go, my thing's important, got to spend on that. Doesn't matter what anything else is. Doesn't matter we don't have the revenues. None of these articles talk about revenues. Doesn't matter that we don't have the revenues. We've just got to be spending on this because it's a good thing to spend money on. If we had fiscal notes, starting with this one, it would be useful in trying to figure out where and how we ought to be investing our money. Another one, this was by Tom Begich. He's running for governor, former state senator, now running for governor, Tom Begich. Alaska's energy security must come first. And it's an article about how we need to, invest in all these renewables, and we need to have additional support for the renewables, support being the buzzword for additional government credits, tax credits, or investments of one sort or another in these projects to provide Alaska's energy security. Okay, how much are you talking about, Tom? What is the cost? What's the investment return on that? What's the betterment that we get out of those compared to what the baseline is? It's not like Alaska is going to run out of energy. We're going to have to import some in terms of LNG in order to provide support to the Alaska consumption side, since it's heavily gas weighted. We're going to have to import some, but it's not like we're running the risk of running out of energy. Begich just wants it to be a different type of energy, and is trying to fashion an argument about how that is important for Alaska's energy security. But no numbers, no calculation of what the cost is, no calculation of where the revenues are going to come from, no discussion of what the long-term return on that is. Just it's important to have energy security, and so you need to spend on these things. This isn't just a Democrat thing, though. I mean, Lessons, I think, is a Democrat. Begich certainly is a Democrat. This isn't just a Democrat thing. Here's the next one that I ran across was one by George Rauscher. And the headline is, Alaska needs more power, not less. And he's talking about the coal plant back up in Susitna that some have proposed and some are trying to support, that needs infrastructure, needs support to make it work, government support to make it work. But Rauscher's talking about how important that is and how that would provide more power, and how we could have more power if we just started looking at these other investments we could make in these other projects we could develop. Again, no numbers, no cost numbers, no analysis of where's the revenue supposed to come from, and no analysis of what the long-term fiscal impact is. It's just the cumulative effect of all this was, we got a lot of op-eds, and we're going to have a lot more op-eds as we get into the governor's race and we get into the legislative races. We're going to have a lot of op-eds about, you need to spend on this, you need to spend on that, you need to spend on the other thing. And look at Alaska needs more power. Alaska needs energy security. Alaska needs to get off the roller coaster on K through 12 spending.
But how do we pay for it? But how do we pay? Where's the fiscal note? What's that cost?
Exactly right. And that's the sense I came away from. All of these Alaskans would actually benefit from having a fiscal note at the bottom of all of these articles, all of these op-eds about, how are we, what are the economics of these projects. In the absence of a fiscal note, I think that people should read these with a grain of salt and say, okay, okay, you want to spend on that, great. You want to spend on that. You want to spend on a new coal plant. You want to spend on this. You want to spend on another thing. All that's great, but let me figure out what the costs are, or let me ask somebody what the costs are and see if they make economic sense. We have a lot of pie in the sky going on. We've always had a lot of pie in the sky going on, but we have a lot of pie in the sky going on in this state right now. The LNG lines are another one of those. We have a lot of pie in the sky going on, but nobody is grounded. None of these are grounded in basic economics. And to the extent we get off on an emotional drive and we go down one of these tracks like K through 12 or building a road out to a coal plant or all of that sort of stuff, to the extent we get off on these tracks, that explains a lot of why we're in the fiscal situation we're in. We're spending a lot. We aren't looking at the fundamental economics behind them.
Yeah, no, I mean, this is again, we see this all the time, especially around election season, where everybody has every plan to put a chicken in every pot and do all this other kind of stuff, but they never tell you how it's going to be paid for, where the money's going to come from, or what the actual, I mean, it's the long trail all over again, right? It's going to generate millions of dollars and show your work. Show me the numbers. What do you mean? How much is it going to cost and what is the return going to be? It's aspirational. Everything is aspirational at that point. Oh, if we just build more, and if I hear one more Republican especially say, well, we just need more resource development. That'll get us through the next 10 years. I mean, it'll take 10 years to get the resource development off the ground. How do we survive between now and then? That's the question I keep asking.
Oh, and as we discussed last week, and as we've discussed, fairly often, and as I've got I think in last week's Alaska landmine column, resource development is costing us money. I mean, when you look at the credits and the deductions that the oil companies are to take, as production's going up, which everybody says, oh, great, see, resource development, production's going up. As production's going up, revenues from the production tax, from the tax on oil is going down. It's not even staying. It's not even going up a little bit. Not as much. It's not even staying even. It's going down.
I know.
Development's costing us money.
I like your idea. There should be a fiscal note attached to each one. Yep. You got to have a fiscal note attached to each one. Brad Keithley, Alaska's 4 Sustainable Budgets, the weekly top 3. Thank you, Brad. Appreciate you coming on board.
Michael, as always, thanks for having me.
All right, folks, we have more coming up in hour 2. We'll continue the Michael Duke Show. Sorry, we ran out. I mean, I'm laughing so hard here that I just, man. It's true though, right? I mean, we got all these great ideas. Okay, great. How are we going to pay for it? How's it going to happen? How's it going to, oh, you don't have that answer? Okay, great. That's great. Oh, we need more money for the schools. Okay, great. How's that going to get paid? Oh, you don't have an answer for that? Okay, great. It's astonishing.
Yeah, you made a statement back in the segment I think is very insightful. Show your work. Show your work. A lot of these op-eds wouldn't pass 5th grade. The 5th grade math teacher's requirement that you show your work when you turn in your test. Show your work on how your math works. Show how you got to the answer that you got to. I remember law school exams were like that. Show how you reach the conclusion you did. We don't do that. I mean, these op-eds, all these op-eds, George Rauscher's included, are just, let's jump to the end game. Oh, we have a coal plant. Or Tom Begich, oh, we have all these renewables. Or Kelly Lessons, oh, we have this great K through 12. They just jump to the end without showing their work about how we pay for it, what it's going to cost, how we pay for that cost, and what the return on that investment is. And
right.
And we're not even passing the 5th grade test. Of these proposals.
Well, tis political season, Brad. Expect tons more of this, right? There'll be a chicken in every pot and a moose on every table. And let me show you how I'm going to do it. No, I won't show you how I'm going to do it. I'm just going to promise that. and we'll figure it out on the other end. That's how it's going to be.
Because it's a good thing. It's a good thing.
It's
Alaska energy security is a good thing. Don't worry about how we get there. It's a good thing.
I think a $1 million deposit in my account would be a good thing. I think that would be a great thing. So tell me how that works. Tell me how that works, right? I mean, that's where we're at. How can you figure that out? Or back to, the red line and the blue line. They're pretty easy to go pull that information out. There's your work. I mean, show me how it's wrong. Oh, you can't. Okay, that's all I wanted to know. It's just one of those things, right? It's one of those things, my friend.
Well, it's you're right. We're going to have a lot more of these come up in the campaign season, and I'm going to be complaining about a lot more of them, I'm sure, as we go through. But for listeners and readers, think about that. Think about what the fiscal note would be on this proposal, and think about why they aren't giving you the fiscal note. Think about why they aren't telling you what the economics are. Think about why they aren't telling you what the cost is, what the opportunity cost of what we otherwise could be investing in, or what the impact is on lower and middle income Alaska families if we're taking the money out through PFD cuts. Think about that.
It's the worst part is that when I ask somebody, how do we get out of the fiscal situation we're in? Their answer is, well, resource development. We need to develop the Okay, well, I mean, first off, how do you pay for that resource development? What's the cost going to be to the state? And again, forget about the timeline, because they're not even thinking about the timeline. The timeline is 5 to 10 years. I mean, 5 years at a minimum, 10 years, probably more than likely. But again, it's like it's not a real answer. It's not a real answer.
Yeah, particularly when you look at oil, and particularly when you look at what the impact is on production taxes. I mean, I've gone through all the periods now. I've gone through the current period, the next 10 years, and the future beyond that, using DOR data from Pika and Willow, and you can look at what the out years look like, 25-year span, and all of those years, production taxes go down. Production taxes don't come back. And so people who say, oh, well, we got to do the next 10 years, don't worry about that. The 10 years beyond that will be okay. No, we're not. They don't come back. They keep going down. Yeah. And so when people talk about resource development, oil development,
they
haven't either A, they haven't done the numbers, or B, they're just lying.
Yeah. Again, aspirational. And yeah, you're right, Harold. That's exactly right. We're still chasing a pipe dream, millions being wasted on gas. We were just talking about that. Where's the numbers? Where's the fiscal note on that? How much effort, energy, and wishing are we wasting on yet another program that's going to go nowhere? It all sounds great on paper until the rubber hits the road. Right. That's that's where it is. It all is desperation. Brad, what else are you looking at this next week here? We got about 2 minutes here.
Well, I did a piece a few weeks ago on K through 12 and focused on why it's important to start, when we look at increases in K through 12 revenues, start focusing on local governments. Alaska lags the national average hugely in terms of the percentage of revenue for K through 12 coming from local governments. And the result of that is local governments really don't care that much about constraining K through 12 spending. They're mostly advocates of additional K through 12 spending because they don't have to pay much for it. If you push, like the other states do, if you push more responsibility for raising the money to pay for K through 12 spending on local governments, they would be more responsible in terms of constraining that spending and spending it more wisely. So I'm going to do another piece on that this coming Friday.
Well, I'm interested to see where we go from here, where it all ends up at, and we'll be watching that for sure as we go through. Brad, thank you so much for coming on board. As always, it's good to talk with you. Appreciate you being part of the show today.
Michael, as always, thanks for having me.
All right, folks, that does it for hour one. Hour two is dead ahead. The Michael Duke Show, common sense, liberty-based, free thinking radio. Here we go.
Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Live around the world on the internet at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Good morning, my friends. Welcome to hour 2 of the big radio show for this Tuesday edition. 42 beautiful degrees here in Homer. Man, yesterday, nothing but sunshine. It got hot in the house. That's how sunny it was. We had to open the windows up. It was just absolutely beautiful. Northern lights out last night. Here, clear skies, just absolutely gorgeous on top of the world. On top of the world here in beautiful Homer, Alaska. I hope that your September is wrapping up as nice as mine has. It's been great. 28 degrees in Fairbanks this morning, said Miguel. Saw pictures of snow several places, and you guys can keep all that as far as I'm concerned. So thanks for sharing with us. We just finished up with Brad Keithley from Alaskans for Sustainable Budgets. Brad was going over the weekly top 3, and it was interesting. It was interesting to watch. Some interesting discussions there. And interestingly, we got some pushback out of the chat room that we were wasting our time and that we didn't understand the issue and that we were just making up facts. All of this coming from the chief of staff for Andrew Gray, the Democrat. And we just, and then telling listeners in the chat room to just go sit in the corner because they don't understand. Let the adults talk, kids. Which, of course, that was the superiority that I knew was coming. The moral superiority of, we're just, you just sit in the corner, kids. Don't bother us. But this is the kind of reaction that we're seeing all over the state. I mean, what Brad is talking about, you can go out and pull the numbers yourself and take a look at it and analyze it. I mean, we have to acknowledge that something is going on in the Permanent Fund Corporation, that there might be a different way, a different opportunity. And when different funds around the country are utilizing the Vanguard method that Brad is talking about and realizing great returns for very little management, for the investment of management fees being super. We were talking about Wyoming. Wyoming does this. Wyoming has a fund. It's not a permanent fund in the same way, but it's a oil-based, fund that was generated by some of the Permian Basin stuff and everything. And they use that fund and they invested in the S&P. They got one guy that gets paid $200,000 a year to manage the fund. And they're getting the returns. They're getting the returns. Harvard had their own fund. They got 9% out of their fund returns for the same kind of thing. All I'm saying is maybe we should just take a look at it and analyze whether or not that makes sense, instead of defending the system that is producing worse returns. That's all I'm saying. That's all I'm saying. Let's we're going to continue on here, and Brad is right. The biggest of the 3 topics that I think really that caught my attention was the final segment, which said that we should have to include a fiscal note with every op-ed, right? I've got this great idea, this aspirational idea. Here's what it is. And then you're like, yeah, but how do we pay for all that? I have no idea, but isn't it a great idea? Yes, it's a great idea. What you're saying, if we could do it in absence of reality and anything else, and it costs us nothing, yes, we should absolutely do that. But if it's going to cost us money, and we live in the real world, where then you have to show your work. How do you get here from there? Is it a good return on investment? Do we have the money to invest in it? Right? And I know we keep coming back to the gas line, and I know a lot of you out there have your heart set on this gas line providing a new renaissance for Alaska. But the reality is, I don't think it's going to happen, folks. Again, here we are. How many months? When did Glenn Farn take the wheel on this thing? Was that 6 months ago? 8 months ago? Glenn Farn has taken the wheel, and yet we still, of all the things that they're doing, we still do not have a new cost estimate for the construction of the pipeline. I mean, they've got a whole list of things that they're going through there. And there's a whole list of things that they want to do that are going to cost lots of money, millions of dollars. Luckily, because it's Glenn, they'll have some private investors that will eat part of it. But remember, the state's still on the hook for $50 million of the planning. That was part of the original deal with Glenn Farn, that they could be reimbursed up to $50 million. You could do a lot of studying for $50 million to do all this setup and everything else. You could keep things afloat for a year or two with that money, and then come back and say, well, the cost of it is not $44 million or billion dollars, as was originally proposed. That new cost of creating that pipeline is now probably $60 million or maybe $80 million. We don't know, because the 44 billion number is 10 years ago, right? Pre-COVID, pre-tariffs, pre-steel, companies changing and moving and things going on. We don't know. But it's just another example of, this is a great idea. Wouldn't it be great to have Alaska gas? God, it would be fantastic. I would be so excited if somehow the pipeline ferry just plonked down a pipeline between here and there, and Alaskans all of a sudden had access to their own resource. I would be just pleased as punch. But then there's this thing called reality. And let's go over to this opinion piece real quick here from Kelly Lessons, who is with the Anchorage School Board. And she goes on about, she ties this all to a big roller coaster theater production of, kids where the roller coaster breaks and the kids get killed and everything else. And she likens it to the cyclone, the roller coaster up and down. She talks about the $700 per student increase, but how it's just not enough, because now they're losing money from the federal government, and it's just not enough. And now the State Board of Education is going to look at this regulatory change to define local contribution. And it means that they may not have that $15 million of the local contribution to the Anchorage School District may be at risk. And we're going to need more. We're going to need more. How much does it cost? It's, again, one thing after another. It's always going to be pie in the sky. It's always going to be, well, we need resource development. Okay, how much does that cost? And how long does it take? This is the question that I have asked most of the politicians who have appeared on this program at one point or another. How do we pay for that? And unless we get some kind of, budgetary issues, zero-based budgeting, we have to look at new revenues in the form of maybe, a sales tax or an income tax, or we have to cut the size and scope of government. Unless we hear direct things like that, if I hear one more thing where they said, well, we're just, we need to develop our resources more. Again, the 10-year forecast says we're in deep doo-doo. The deep doo-doo. So how do we survive the coming 10 years while we're waiting for your resource development to come online? And oh, by the way, what's the cost going to be to the state for investment and everything else? We just don't know, because again, all of it aspirational. Sounds good on paper. Sounds good. Yeah, Harold says it, there's no accountability to government-funded pipe dreams. And we are in election season, so what do you know? What do you expect? Well, you expect that every politician is going to say something along the lines of, I've got X program and here's what it's going to do for you. No mention of what it's going to cost anywhere, anytime. And that's a huge problem. Going back to number 2 of the weekly top 3, and that was the Permanent Fund Corporation and their defense. Again, just as I started at the top of the hour talking about it, we have to admit that there may be something fundamentally wrong with the way that we're doing the permanent fund. If we are not getting the returns that we need, and I know that they're out there crowing about, look at us, we beat our own expectations. Well, your own expectations weren't that high. We beat our own benchmarks. Well, that's great. But if you look at the numbers, and Brad Keithley has got all the numbers, you go back and you read, and he's not making these numbers up. He's pulling these numbers from the reports of the permanent fund. You can go back and see that they're not doing so hot, folks. And it's costing us $800 million a year plus to do that in management fees. And yet, again, we've got things like the Vanguard, S&P. There are other funds being used that are being managed for a fraction of that amount of money. Not $800 million plus, but again, $200,000. You got one guy managing the fund because he's using Buffett's Vanguard 500 fund. And they're making returns that are much higher than what the permanent fund has done. And yes, that might mean we have to sell off some real estate. We have to sell off some of the investments to change how we do. It might be that way. But you can't keep telling me, you can't keep gaslighting me into telling me what a good job that you're doing. I mean, it's astonishing. And unfortunately, I'm not sure that we're going to be able to, I'm not sure we're going to fix this. I'm not sure we're going to come to any kind of way to actually fix this until the wheels completely come off the bus. Right? It's only in the full-on crash that somebody will say, well, I guess we need to, now, because we can't change it. We can't change anything. We've always done it this way. And it won't be till the full crash comes on that then we'll have to address it. I mean, you can't just keep proposing pie in the sky stuff with no way to pay for it. You can't just keep proposing things and then gaslighting people and telling you what a great job you're doing. And yet comparatives show that you're not doing that great a job. It's astonishing. All right. I got one story that's coming up next that we're going to talk about, and I'm going to give you some of my thoughts on it. It's a spicy story, and it has to do with Homer and Charlie Kirk, and this is interesting. This is going to be some interesting stuff. I want to get your thoughts on this. We will continue with more in just a moment. The Michael Duke Show. Common sense, liberty-based, free-thinking radio.
Running on 100% pure beard power. Oh, also some coffee. We dip our beard in coffee.
Nice beard.
The Michael Duke Show.
Okay, we are back in the saddle again. You guys ready to go? Let's see what else you guys have been mentioning here. Can we just Bill just said, can't we just get the damn potholes filled? I mean, yeah. I mean, wouldn't you that would be, that's a priority in government right there. Let's see. Kyle says, I am an individual. Yes, you are an individual, Kyle. You are. Frank says, thank you, MD. We will keep the snow. Need it for resource extraction. You go, baby. You enjoy that snow. You enjoy every minute of it. Absolutely. Okay. Let's see. Down here. I'm here. Stutter. We need a study, said Brian. We need a study. I'm sure the Alaska study industry will sound off on that. They would be more than happy to provide you with another study to study the study that they already studied before they studied the previous study. And it'll only be $50 million for you to be able to do that. They would be more than happy to pull all that together. Yeah. Yeah. Let's go here. Let's see. I think I'm all caught up. Stay off my lawn. Chris says, life's tough in the tundra. Life's tough in the tundra. All right. 35 degrees in Soldovia. A little cooler in Soldovia. I'm up on the hill here. It's nice and warm here this morning. Dog went out and was like, no, this is nice. Where's all the winter I was promised? I don't see any winter. That's okay. That's okay. Oh, it's cooled off. It's 38. Went from 41 to 38. So it's cooling off a little bit this morning. Jesse asks, the fiscal notes don't always match the legislative bills. How's it going to cost $0 for enforcement? I know, Jesse, but it's a start, isn't it? Isn't it a start? I mean, that's where we need to be. That's a start. Rick said something about drilling a lot of exploratory wells closer to home. Instead of drilling on the North Slope where we know that there's, 17 trillion cubic feet of gas or whatever, we should be drilling closer to home. And that has happened. And in fact, I think Brian asked something about the hole near Nenana. Somebody punched a hole near Nenana. It was Doyon or somebody, maybe it was Doyon. They were doing some exploratory drilling for gas in the Nenana area. And I don't think there was enough recoverable there to get it done. But that would have made sense. You could have built a pipeline out of Nenana up and down the highway. That would have been, gas to Fairbanks would have been great. Chris says, we're lucky we get 7 months of snow. Lots of minutes. I don't know what lots of minutes were. Maybe that's a typo. And you can keep the 7 months of snow. Again, I'm not too proud to admit it, folks. I am not a huge fan of snow anymore. It's okay. It's okay. I'll live with it. But I prefer the milder temperatures. I think I just got a little burned in Fairbanks when I was in Fairbanks. The That last winter nearly broke me. That last winter in Fairbanks, where it was 57 below or colder for more than 3 weeks solid at my house, I was like, I am done with this place. And so, I mean, I like fall colors. I like the coolness. I like a little rain. I like, I'll deal with it. I like it. All right, let's get back to it. Here we go. Common sense, liberty-based, free thinking radio. Like, share, subscribe, ring the. Yes, I got freezer burned. Good point. Oh, that's nice. That's nice. Here we go.
Public enema number one. Oh, wait, sorry. Public enemy number one, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke Show.
Okay, so lo and behold, I'm peeling through some of the news stories. Who am I kidding? My wife was looking at some of the news stories last night. She said, "Did you see this?" I'm like, "No, what?" And because my wife, she helps me out sometimes. She keeps on top of some stuff that I am just, but I was putting my feet up at the end of the day. It was a 12-hour day yesterday, 13-hour day, whatever. I put my feet up, just kind of relaxing. And my wife's like, "Did you see this story about what's going on with the Homer News and the Peninsula Clarion?" And I'm like, "Well, no, what's happening?" So for those of you who haven't been paying attention, now we touched on this last week, and I expressed my not concern, I guess distaste would have been the strongest word for it, about an article that appeared in the Homer News, which was then reprinted in the Peninsula Clarion. They're owned by the same company, right? So the one and it's the same. And the story was about the Charlie Kirk Vigil. And the Charlie Kirk Vigil gathered about 300 to 350, I guess, depending on whose count you counted, people to hold a vigil for Charlie Kirk down on the Homer Spit. And it was nice. I mean, it was a nice thing. Then the Homer News, one of the reporters there, Chloe Plesnak, wrote an article. Now, I've met Chloe. She interviewed me when I bought the stations here. We had a really nice conversation about community, about pulling people together instead of dividing them. I thought it was a very pleasant conversation, and her report on our interview was polite and nice and everything else. And she seemed like a really nice person. And it was nice. But in her reporting of the Charlie Kirk vigil, she had there were some problems with it. I'll be honest with you. Particularly the thing that really kind of rubbed me the wrong way was that at one point in her, and I didn't screenshot what she wrote because it's since been changed. I didn't screenshot what she wrote, but the thing that stuck out to me, and we reported on this last week because I read it to you on the air, was that she said that Charlie Kirk was his racist ideology. I think she actually said misogynistic too, but the racist thing stuck out to me. That he was pushing his racist ideals on campus, as if it was a fact. It wasn't just some people say, it was as if it was a fact. She called him a Christian nationalist, which he is. He's a Christian and he's a nationalist. He was a patriot, right? So he was a Christian nationalist, although those two words strung together generally tend to have more of a different label attached to them. It kind of, but Christian national. But anyway, it's not inaccurate to say he was a Christian nationalist. But what got me was that when she talked about his racist ideology, pushing his racist ideologies on campus. And I have a real problem with that. And by association, she was essentially saying that those 350 people that showed up on the beach to hold a vigil for his, to hold a remembrance for his life, were in part, by the same tone, racists, right? Now, Sarah Vance and Cassie Lawver were the two people that put this remembrance together. Needless to say, Sarah was a little upset about what happened, and so she fired off a letter to the the parent company of the Homer News, Peninsula Clarion, it's Charter Sound, whatever it is, whatever the name of the company is. She fired off a letter saying this is unacceptable because it had falsehoods and inaccuracies in it. I wish I could get Chloe. I would love to invite Chloe up here and say, show me where he's racist. If you spent any time on the internet in the last 15 days, you know that these were a lot of the things that people were saying. He was a misogynist. He was a racist. He was all these things. And yet, how many videos have you seen of people saying, in fact, I saw another video the other day where there was a group of black people who were all like, we heard that Charlie was racist. And then they were shown the videos and they were like, well, that's not racism. That's not what he said. That's not, they were shocked. Again and again and again, different edits of different times where he'd tackle these issues. But see, this is the problem, is you've got reporters with their own bias, and they're not even trying to be non-biased, and they were reporting things as facts that are just things that other people said. Somebody said he was a racist, ergo he's a racist. Instead of and so here's what the story is. The story is this. A group of reporters and editors at both the the Peninsula Clarion and the Homer News are resigning effective October 13th. Carpenter Media Group is the owner of the corporation, and they were sent the letter by Sarah Vance, like I said. The people who are leaving include Aaron Thompson, who's the editor of the two papers, plus the Juneau Empire, because they own the Juneau Empire as well. Jeff Helminiak, who's a sports and features editor. The Clarion reporter, Jacob Dye, who he writes 90% of the stuff that's in the Peninsula Clarion. And Chloe Plesnak, the Homer News reporter, who just started less than a year ago. And there is one other reporter in Homer who's not resigning and will be the only remaining reporter at the paper. Now, the resignation comes from the fact that the parent company, after Plesnak wrote this article and created this backlash, afterward, the company went in and edited the article. First, the article was removed. Then it was altered and republished without the reporter byline. In the resignation letter, the reporters and editors say the article was removed and altered, quote, without consulting the editor of the Homer News or the reporter who wrote the story. Nothing in the altered article indicated that it had been changed, they said. So they took it out. And here's how it reports now, by the way. The racist part is not in there anymore. It says, Kirk was a far-right political activist whose views have been tied by many to a rise in Christian nationalism across the U.S. He regularly toured college campuses across the country, engaging college students in debate where he defended his views, including criticism of the Civil Rights Act and Martin Luther King, as well as opposition to gun control and affirmative action. That's a pretty accurate paragraph. That's pretty spot on. I wish I had a screenshot of what she wrote before. It has nothing about racism. It doesn't say that he anyway. I thought this is a good edit. But they were absolutely incensed. How dare they take away my words as an owner, publisher, editor? How dare they do that? So in retribution, they're all quitting. To which I say, okay. Now here's the irony of this. Over the weekend, there was a gathering, a protest, or I guess maybe not a I guess it was a rally, not a protest, but it was a rally in favor of the First Amendment and free speech, right? And this was basically a rally that was to go out and protest the fact that Sarah Vance, and that was the other thing they said in this letter, is that by bowing to Sarah Vance's outrage, they were harming the integrity and the trust how did they put it? The trust that they had in media. There we go. We believe this destroys the credibility the public has placed in us as reporters and editors. See, that's the problem, is that when you do things like this, when you put a label on somebody that their opponents have called them, Nazis, racist, misogynist, whatever, when you use that as if it is fact, instead of, again, let me just go back. Kirk was a far-right political activist whose views have been tied by many. Not saying it's a fact, just saying tied by many people believe. Right? That's a good modifier. That's a great statement. Many people believe, could have been many people believe to be racist, not just stating he is a racist, which is what Plesnak did in the first version of the article. It was very clear. There was no wiggle room. So you, reporters at whatever paper that you're at out there in America today, you are destroying your own credibility with the public when you are not neutral in your bias. When your bias comes directly out, because again, I would love to have Chloe or somebody else on the program to show me where Charlie Kirk was a racist. Show it to me. In full context. Show me the full thing. Don't just give me a 10-second soundbite of a larger argument that he's making. Show me the full discussion of the 3 or 4 minutes of conversation back and forth. Show it all to me. Prove to me that he was a racist. You can't, because he said definitively he is not. Anyway, so this whole thing, they had this. I'm sorry, back to the rally. I'm agitated by this. Back to the rally. So this last weekend, they had a rally in Homer to support the First Amendment, to show those fascist Republicans that they can't shut down free speech. And like 15 people showed up, 20 people maybe, at this rally about how it was, versus the 350 people that showed up for Charlie Kirk's remembrance that just didn't want to be labeled racist by association because they showed up at Charlie Kirk's rally or a remembrance. I mean, I think people are getting tired of this. I really do. I think people are getting so tired of this scolding and this guilt by association, and they're getting so used to the fact that the news media reporters are not even pretending to be unbiased anymore. Now, these reporters, okay, I guess you guys gotta go. If you have to, you know what? You do as your conscience guides you. But as an owner, if I was the owner of a paper and I was faced with this kind of blatant, and it was blatant, folks. Again, if somebody has a screenshot of what she wrote before, please send it to me so that I can read it verbatim so you can see the difference. But as an owner, if I made a decision that, we need to be more middle of the road, non-biased, non-name calling, whatever, then what they changed here in this article is perfectly acceptable. And I really don't care if you didn't check in with the reporter or check in with the editor, because they are the owners. Those two work at their pleasure, right? But it's just, again, cry me a river. Nobody was impeding on your right to free speech. You can still speak freely, but your reporting should be, again, non-biased, right? Your reporting, again, should be middle of the road. It should be not reporting things as factual when they're demonstrably false. I mean, that's the Jimmy Kimmel thing all over again, saying the guy was a MAGA, whatever. I mean, when it was demonstrably false, that was really the big thing. Not that he was making a joke about it. I mean, that's a kind of offensive, but the biggest thing was that he was passing on blatant falsehoods. That's my biggest rub on this whole deal. Anyway, okay. It's too bad. I mean, I enjoyed reading Jacob Dye in the Peninsula Clarion. He always had he was always pretty much a straight shooter. So that's sad for me because, again, and he wrote 80 to 90% of the articles in the Peninsula Clarion, but that's just how it is. I guess we'll see if the papers continue. Do they sink or swim? I don't know, but we'll see. Maybe something will come out of this. All right. We got to go. We're going to continue here in just a moment. The Michael Duke Show. Common sense, liberty-based, free thinking radio. We'll be back with more right after this.
We're broadcasting live through a series of tubes.
Allowing all of these entities to provide streaming stuff going on the internet.
Well, it's kind of hard to explain. Sorry. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Okay. Let me do this right here. And we'll do that. We'll do that. Change that over there. This becomes Chris over there. Chris Story is about to join us, so we'll get to him here in just a second. We'll add him right now. Hey, you there, my friend?
Good morning.
How are you?
I'm doing great. It sounds like maybe you'll pick up Jacob. He could be a man on the street reporter for you.
Jacob could be a man on the street. I don't know. I guess. I don't. What is your thought on this? I mean, you read the original article, I'm assuming, because there was such a fervor over it.
Actually, I didn't
Okay.
because I don't read that Homer News. But it was brought to my attention, and in fact, Sarah Vance called me, and we chatted about the situation and what she was pleased that the company had done the right thing and made these modifications. And, so she was actually rallying around the paper saying, hey, let's all support them. They did the right thing here. Let's show them some support. But I said, I pulled my funding from the Homer News a while back anyway. And so I wasn't sure if I'd, even with this modification, is that enough to bring me back to the table there. But I don't know if you noticed, but over the course of, I don't know, most of this year, you would think this paper's whole goal was to destroy the Trump administration, or just, I got so tired of seeing that Trump this, tariff that, Trump that, just like, come on, give me a break. Like, let's report on the parade. Let's report on the fishing, the weather, who died, who was born, who got arrested at their mother-in-law's house.
Right.
I mean, the small town paper, and they were acting as though they're making some significant cultural play on the political side.
Right. Well, but again, they could the rewritten story actually covers the memorial in a fair and balanced way. I mean, that's all we want is fair and balanced. I think what they say about Charlie now was accurate. Kirk was a far-right political activist whose views have been tied by many to a rise of Christian nationalism across the U.S. He regularly toured college campuses across the country, engaging college students in debate, where he defended his views, including criticisms of the Civil Rights Act, Martin Luther King Jr., as well as opposition to gun control and affirmative action. That's accurate. Accurate.
I mean, look, we could debate the term far right, because you think of, far right. What did Netanyahu just called it, the far right. So it's kind of, that's debatable. But I hear your point. Yeah, they softened it and took out the super invective piece of it. But is it too late? Michael, do you know that we used to have two papers in town in Homer?
I did not. Educate me.
Yeah. Judge Hornaday then became two-term, maybe three-term Mayor Judge Hornaday. He started his own paper back in the 90s, I want to say. It's called the Homer Tribune. And it was basically an answer to what he did. I didn't want to put words in his mouth, but in essence, it was an answer to the Homer News. Like, okay, we want options here. And so we had two rivalry small town papers. One came out on Tuesday, one came out on Thursday. It was great. I guess it was Wednesday, Thursday, but it was fantastic. Loved it. Love supporting both of them. And that might be what happens and it wasn't as though Mr. Hornaday's paper was a right wing propaganda piece or anything. It was just an alternative. And I don't know exactly what his beef was with the Homer News, where he saw that opportunity, but there was something that he didn't care for coverage of, or it must have just been an opportunity that he took it. I think that's what's opened up now. It's maybe there'll be another. I love that the new editor stopped Greg Sarber from publishing in the Homer News, and Greg said, "Fine, I'll go start a Substack," which actually has equal the readership of the Homer News. And Greg Sarber is killing it with Seward's Folly.
Yeah, Seward's Folly. No, again, it's just astonishing to me, and quite honestly, I question whether or not this could be the death knell of the paper when you start losing.
It will be this iteration of ownership. I mean, how many people? Look, I advertised with them for 22 years. This last 2 or 3 years, I don't even know who our sales rep was. They never once donned our door. They never once said hello. They never said anything other than, "Hey, where's your ad copy for this week?" Nothing. So the service went downhill. We used to have people at our doorstep every week saying, "Hey, how's it going? What can we do for you?" That's when it was more locally owned. And at least Morris Communications was being communication with you.
Yeah.
They just had a different, and Lori was the managing editor. She was fantastic. I remember one time during the 2011-12 Naderma Streams Ordinance debate, the lead reporter put on Facebook, on his private Facebook page, that he lamented having to go be surrounded by idiots in Anchor Point who were debating this. And I screenshotted it and sent it to her. And she took care of business. You know, you wouldn't have had to go to this level with that old management system. But I think it'll probably change hands. And to your point, these guys are free to quit. Absolutely.
Yeah,
that's
absolutely free to quit. What are we going to talk about next, Chris? I mean, we could talk about this if you want. I think you offer a unique perspective.
Finding your why is what I'd plan to talk about. Finding your why.
Finding your why. Well, these reporters are all going to have to find their why. That's for sure. Here in just a moment. All right, here we go. The Michael Duke
probably feels really good.
Free Thinking Radio. Let's do it.
Public enema number one. Oh, wait, sorry. Enemy. Public enemy number one, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke show.
Yep, pain in the something or other. Something I forgot to mention about this whole article, that they're not planning to leave the Homer News and the Peninsula Clarion until October 13th because, I guess if you had real strength of your convictions, you'd be like, I'm walking out now. But no, I got to wait till the end of the next pay period before I walk out. So we'll just I don't know. It's just Chris Story, the man from Homer. He was just giving us some backstory on the whole small town Homer newspaper feud changing and whatever. And very interesting. Feel free to expand on that, Chris. But today he says he's going to talk about find your why. So I'll let you go, Chris.
You're not going to paint me into a corner. No, and maybe this all dovetails. I don't know. If you think about why, Nietzsche said, "He who has a why to live can bear almost any how." And I think when you run thin on the why of life, why are you doing what you do? Why do you, why anything? Why are you here? Why do we exist? When that runs thin, every how becomes a burden. Every how, every circumstance becomes monumental. I can't take it. And you begin to feel the burden upon your back. So I think a really good exercise for anybody, whether you're about to quit, whether you've given your 2 weeks notice in protestation for your boss doing something you don't like, whatever it is, a good exercise would be to go through this. And maybe we should do this even like once a month, probably, if we're on our game. But it's to spend a little time getting quiet and really listening to your own thoughts and asking yourself what matters most to you in life. And maybe add to that. So you've got what matters most to you in search of why, what matters most to you. And maybe better yet would be to say who matters most. Because I think who is the secret to why. And why is the answer to how. Like, how can you bear the circumstance? Well, because of my why. Well, where do you get your why? It comes from who, not whoville, but who in your life, who are you here to serve, who you care about, who are you becoming in the search of excellence, or whatever it is you're looking for in life. Who are you? So I think who's the secret to why, and then when is the next obvious question to ask, and when is now. So to your point, if some burden somehow became so burdensome that you couldn't tolerate it anymore, well, then why is your when becoming next week or 2 weeks from now? Why isn't it right now? If you really had a conviction of your own, you'd say, now, drawn a line, you've gone too far, I quit. This is it. This is now. But so I think there's some, you're kind of, I think, calling these reporters out as a little bit like, are you, how convicted are you that you're going to wait till the next pay period? I mean, that's kind of like, that's pretty weak tea. But I think a sense of urgency, Michael, in life can be manufactured. You can manufacture an urgency of your why or your how simply by saying, what if you treated, as Ogmandito instructed, what if you treated every person you meet as though they'll be gone at midnight? And Les Brown also said something to the effect of, what would you do today if you knew you only had 3 months to live? Would you go to work? Who would you call? What would you do with your day if you knew the time was up in 3 months? And then he asked a very powerful question, or actually it was a statement. He said, how dare you assume you have 3 months? In other words, urgency, act now.
Yeah. No, you treat life. I mean, if you knew you only had 3 months to live, you'd pitch out everything. Everything was out the window then. I mean, that really would change your whole thing. I mean, we always hear, live like there's no tomorrow, but do you really acknowledge the depth of that phrase or that comment? Live like there's no tomorrow. If there really was no tomorrow, what would you do differently? If you knew that in 90 days you would be no more, what would you experience?
I think why you're going to work today would change, why you're in an argument with your sibling, or why you're in an argument with the person in traffic or line, or how you treat people would change. I think how you treat yourself would change. I think if we just looked at, do you remember the movie Brewster's Millions with Richard Pryor?
Oh yeah.
And he had to get rid of all this money in a certain period of time. And it was the big challenge. You couldn't save it. If he wanted the big payday, he had to spend this in the interim. And I think the time value of life is that way a little bit. You cannot save up time. You do not gain interest on time you haven't invested or invested well. Anything, time can be squandered. Time is a currency, is depreciating every single minute that it's not used. Every single minute you're unintentional with it. Every single minute that you don't invest in the people in your life and or yourself. And that's not to say that we can't sit on the couch and Netflix and chill. Of course, but I'm saying intentionally spending your time. It's a currency that doesn't actually grow or appreciate. It's not real estate. It's depreciating constantly. And the value of it actually only increases when it's invested properly, only increases when you start to appreciate that it's a finite supply. And hopefully you don't wait until you get close to that end or you get that 3 month notice. Hopefully you begin to appreciate time, and it appreciates, in fact, in your life as you spend and invest it today, every minute. But it has to be intentional. It has to be from a place of being present, being generous, being grateful, and behaving like today is the day that you're going to make a difference, a positive difference in the world, one life at a time.
So how do we find our why then? We have to analyze it from that perspective of, here's your thought experiment. You only have 90 days to live. What would what?
Yeah, I think that's a great thought experiment. And then add to it, who are you? Who and don't say, oh, I work these hard, laborious hours. I'm doing this for you kids. Because the fact of the matter is, the only people that will remember you worked until 10 p.m. tonight is your kids 20 years from now. That's it. Nobody else will remember or care, but the impact is directly on your kids. It's directly impacting your relationships. So who, I think, is the secret to why. So who are you doing this for truly? Get real about that. Are you sure you're doing this for the kids? They've got their own lives. They're going to go on and make their own income. They're going to go on and make their own lives. Are you sure that's why you're overexerting over here and you're underinvesting there? It's a matter of who do you have in your life that creates the why and the circumstances, and then the how of that takes care of itself. You know, the burden, in other words, the circumstance you find yourself in will become less and less intolerable. And I would suggest anybody who's questioning the legitimacy of this conversation we just had, please go read Man's Search for Meaning by Viktor Frankl. It's a fantastic book. It's hard to read because it's, in other words, his story of having gone through 2 concentration camps during World War II and lost his entire family. But he came out as a psychologist. He went in with a manuscript and a thought process, and he came out with a whole other way of looking at the world. And he was able to find his why and create a circumstance inside Dachau that created enough how for him that he could get through, right. And he affected millions and millions of lives afterwards positively.
So again, it's prioritization is a big part of this, and then realigning your priorities. But again, this all begins with what we talk about on this program quite frequently with you and your dog is self-reflection, right? I mean, self-reflection is where this all begins.
Yeah, you got it. Exactly. You got it. Oh, by the way, somebody just sent me, and I'm going to send it to you, the actual article. Boom, just sent it to you, Michael. So you should have that from the Charlie Kirk visual. Yeah, so you'll have the original manuscript there.
I appreciate
the original version of You Racist.
Yeah, exactly. The original version. I appreciate that. Thank you. I just got it. All right. Well, Chris Story, final thoughts here. We're down to the last couple minutes. So final thoughts for the show today.
Please don't change any of the words that I use on my broadcast today and on top of the world. Please don't go in and edit. That would be amazing if you had the ability to go in and real time edit and use your own voice to change what I'm saying.
That's my job. It's my show. I can do what I want. Chris Story.
It's my radio station.
That's right. Chris is a racist, and let me prove you what. Let me prove how right here. I'm just gonna do it. All right.
Thanks for this forum. I think this forum is amazing. And I think people are better served here than anything the Homer News is doing. So carry on. You're doing a great job.
I appreciate that. You can find Chris at ilovehomeralaska.com, where he's got links to everything that he does, including his podcast of his weekly radio show on Tuesdays and Thursdays on Top of the World Radio. He's got links to his books, and both fictional and non-fictional, and all kinds of stuff. So, Chris, thank you so much for coming on board, my friend. It's always great to talk with you. Appreciate you bringing us back to even today. We appreciate that.
My pleasure. Thank you.
All right, folks, we are out of time for today. We got to go. Tomorrow, Maxwell Sumner and Mike Shower will join us. Sumner running for the Matsu Assembly, Shower running for Lieutenant Governor. That should be a fun conversation, eh? We'll see you tomorrow. Be kind, love one another, live well. The Michael Dukes Show. Common sense, liberty-based, free-thinking radio. Okay, I was just going to say something to Chris, but he just hung up. He waited all that time for me to get off the air, and then he hung up. Okay, well, anyway, my friends, we appreciate you guys coming in and joining us, being part of the show this morning. I just don't know. It's the whole thing is so crazy these days. But we'll see where we go from here. Tomorrow is another day. Be kind. Love one another. What would you do if you only had 3 months? I'd probably still do the show. It's important. All right, my friends. We'll see you tomorrow.
We've shed our terrestrial radio skin, and now we are slimy lizard internet people. It's the Michael Dukes Show.